micro forces accelerating institutional Bitcoin adoption. So before we dive into the topic, let's begin with an introduction. Let's go with you, Q.
Thanks. I'm Q. I'm from DDC Enterprise. I'm their chief of staff. Prior to joining DDC Enterprise, I was an advisor to the company, and before that, I was running my own crypto venture fund. And before that, I've always been in the investment space, in hedge funds and private equity firms. DDC Enterprise, we're a Bitcoin treasury company. Our underlying business is a food platform under which we own different portfolios of food brands.
Let's go with you, Alessio.
Hi, everybody. Alessio Quaglini. I'm the CEO and co-founder of HexTrust. For those who don't know HexTrust, we are a financial service provider. We've been in the space operating since 2018. We provide custody, staking, OTC services to institutional investors. And we operate out of Hong Kong, Singapore, UAE, and Europe, where we have licenses to operate these businesses. Myself, I've been in the crypto space since basically 2014, before my prior life. Used to be a banker, and funnily enough, before being a banker, I used to work for the securities regulator, regulating market abuse and insider trading.
I'm also an ex-banker. Hi, everyone. I'm Khushboo, Khullar, the venture partner at Lightning Ventures. So Lightning Ventures is a VC firm primarily focused on Bitcoin companies. We have till now invested in 40 plus Bitcoin companies. We also have a syndicate, and we also have a crowdfunding platform called Thunder Funder. Okay, let's start the session. Let's begin with discussing macro forces first. And I would like to pose the question first to Alessio. So you, as the CEO of HexTrust, you have seen how regulatory clarity like the US Genius Act or the Hong Kong spot Bitcoin ETF approvals has opened doors for institutions. So my question is, how do you see global macroeconomic trends such as devaluation, fiat devaluation, or rising US M2 money supply, or geopolitical tensions shaping institutional demand for Bitcoin as a hedge or reserve asset?
Yeah, so I think you touched upon two important points, right? The devaluation of fiat currency and actually the geopolitical tensions. And I think these are actually the two reasons that are really sustaining and supporting the whole industry and the adoption of Bitcoin. So if you think about the devaluation of fiat currencies, this is something that's been going on. We spoke about it several times. It's been going on forever. And unfortunately, or fortunately for us, it's only accelerating, right? So we're seeing governments that they need to finance deficits. They need to finance, unfortunately, new wars. And they need to spend money, and they don't have the money, so they need to print the money. And until today, to be honest, investors, especially at the retail level, they didn't have options to actually hedge against this devaluation of fiat currency. So the only option was basically to buy some maybe gold ETFs. But it's really, but the gold ETF is not something fungible. It's not something that you can exchange. It's not something that you can bring with you. It's not something that you can easily collateralize to actually get operating capital if you're a company. Now, with Bitcoin, the things are really changing, right? So we have one asset. We can speak about the other assets, the other cryptos, but in the case of Bitcoin, the use case is very clear, right? So we have one option that everybody has right now, which is basically the hedge against the devaluation of fiat currency. So this is only going to increase. And as we see, especially the economies right now in the US slowing down, and we're seeing interest rates coming off, right? And the amount of fiat currency that will be printed, we'll see more and more adoption. I'm not sure if actually it's Bitcoin that is actually appreciating, or if it's actually fiat currencies that are depreciating. Maybe this is more a philosophical question. The other one that you mentioned, the geopolitical tension, it's actually another very interesting concept around Bitcoin. Bitcoin is actually one of the few investable assets that are borderless, so they don't really reside anywhere. Even gold, if you think about it, it always resides in the vaults of some countries, right? So when you buy an ETF, the ETF is still linked to the gold that is in the vaults connected to some kind of country, right? Well, Bitcoin is borderless, but more importantly than borderless, it's also geopolitically neutral, right? We're seeing today in the world currencies and tariffs being used as weapons, right, to really impose a certain kind of view of the world to other countries, right? This is very negative. Currencies should just be a medium of exchange. There should not be weapons to control other countries, but this is happening, and Bitcoin as a currency is actually the only thing that is neutral and is kind of doesn't have any connotation of geopolitical or political stance.
Okay. What's your opinion, Q? Do you agree or differ? And also the fact that the recent acquisition of 79 BTC that DDC Enterprise did in, I guess, May 2025.
So we've been buying Bitcoin since May. We're up to over 1,000 Bitcoins today, and we publicly announced that our goal is to get to 10,000 Bitcoins by the end of the year. But stepping back on your question around macro, right? I'll give you a really real example of what a company goes through. So think about it. Pandemic starts in 2020, right? Our supply chains get shut off, right? We are looking at a world printing a ton of money. So suddenly money supply goes up dramatically in 2020 and 2021. Effectively, the government's taking away money from your pockets. So if you look at inflation numbers, so since 2020, we're talking about 30% increase in the money supply. So effectively, you could be doing everything you can within your power as a company to increase value for shareholders, but at the same time, the government's taking money out of your pocket. So effectively, you have to run so hard to make sure that you're just standing still, to not lose out. And that's really, really difficult. So for a company, when we think about how we create shareholder value, we started thinking about what are the possibilities that we can have on our balance sheet that allows us to protect our shareholders' value. So Bitcoin became a really good solution because one, it serves as a reserve. As Alessio mentioned, it's a hedge against fiat money, right? In case of hyperinflation, in case of just irresponsible government spending. And secondly, it's to us a capital. So obviously we take a very positive long-term view on Bitcoin over the coming years. So to us, it's an appreciating asset. Then furthermore, because it's programmable and over time more and more ability for us to actually use Bitcoin as collateral easily. So if we actually choose to use that asset as a collateral, we can. And then obviously finally, it's the idea that we will be able to generate yield on Bitcoin. Now obviously we hear a lot about other tokens that have staking rewards and so forth, but over the last, I would say, months, we've been seeing more and more companies offering us Bitcoin yield products. So it's just a matter of time as this whole ecosystem on Bitcoin-backed products come in play. So to us, it's a really, really good asset to have for our company. And moreover, Bitcoin is culture to us. If you think about our consumer base, majority of them is actually Gen Z. So they actually do welcome the idea that we're adopting a new technology. So we have over 18 million customers, 80 million app users on our platform. And so that kind of engagement when we have with them, telling them that we have started adopting Bitcoin as part of our strategy, has been very welcoming.
Okay, so there's a follow-up question. Since we have discussed macro, I would like to focus now on micro. And you mentioned about the recent BTC acquisition on your treasury. But can you walk us through how DDC does in decision making, and how do you challenge the internal factors like volatility, or how do you do that?
So we've been fortunate because our board of directors have been very supportive. I think one of them is a crypto OG, so he's been very familiar with what's happening. In fact, he was the one that suggested to our CEO to dig into this area. So from that perspective, it wasn't too difficult. But where the details come in would be how we actually get to execute this strategy. So on surface, when you hear about digital assets, treasuries, companies just raising cash, buying Bitcoin, it's very simplistic. But underneath all that, there's a lot going on. So I spent, in the past, I spent part of my career working at one of the largest pension funds in the world, managing investments for them. And literally, when we started this strategy, we have to think through what are the right risk management protocols, how we should be running governance around the treasury assets and so forth. So the details matter a lot, and how we actually go around raising capital in a responsible way, applying a disciplined leverage to our balance sheet, how we actually execute these trades. There are a lot of details around it. Obviously, buying and accumulating is a mix of spot purchases as well as some structured transactions. So we're trying to balance all that out, and we're thankful that we have sort of built a pretty deep network of counterparties around us to help us through this journey. Hex Trust being one of them, obviously.
Yeah, okay. So Alessio, Hex Trust has been pivotal in providing institutional grade custody, staking, and trading execution for clients like DDC. So what specific operational or technological advancements like partnerships with traditional financial institutions are lowering barriers for institutions to adopt Bitcoin? What's your take on this?
Yeah, I think when it comes to institutions, maybe I can divide the question into two parts, right? So there is kind of a number of requirements that institutional investors actually do not compromise on. And then there's a number of services the institutional investors actually need. Obviously, I would say on the requirements, there are certain things that in today's world, companies like us need to have and need to provide, right? So there's a certain degree, obviously, of security. Maybe usually retail investors are less aware of how important it is to run proper security operations for companies, for custodians or companies that hold assets in custody. But it's not only about that. It's about governance. So complex companies like DDC, they have complex authorization matrices and different kind of user rights, etc. Who decides to buy, who approves, who does the transfers, the operational matrices, etc. So all these kind of processes and flows, they need to be implemented at the custodian or at the financial service provider's level in a proper way to enable the governance processes of our clients. Then you have all the compliance. Right? I mean, this conference is basically about the institutional adoption of Bitcoin, right? So if we want institutional adoption, we also need to be aligned with the compliance requirements. Otherwise, we cannot tap into the public markets, we cannot tap into the banking rails, etc. So we need to make sure that transactions are properly monitored, that we can understand the risk and where the Bitcoins are coming from and where they're coming to. So these are kind of the basic requirements that companies like us need to have. And if we don't have it, it's almost impossible today to pass the due diligence of institutional investors working with us. On the other end, you have services. So in the past, it was really just about, okay, give me a wallet and buy Bitcoin for me, right? That's just the beginning. But you see what Q mentioned before. So institutional investors today, companies like DDC, they don't just buy Bitcoin. For example, they need to get a yield out of the Bitcoins that they have with a financial service provider. Where does the yield come from? Well, the yield comes from either borrowing or volatility that is implied, or it comes from other services, for example, staking. You might be aware that right now you can basically stake Bitcoin and put it at risk to earn yield on other networks. So Core Network or Babylon, they're, for example, examples of this. And this is something that obviously companies that hold a lot of Bitcoins to finance their operations, they would need this kind of services. So it's a whole lot of things. And you mentioned leverage, right? So what if somebody wants to borrow against the Bitcoins that are held with a financial institution? So we also need to provide services such as collateral management, three-party agreements, third-party agreements, etc., escrow, to make sure the lenders and borrowers can meet and lend against the Bitcoins that they hold with the financial institutions. So it's really a complex set of services and requirements that happen behind the scene. And it's not just as simple as accumulating Bitcoins by issuing debt in the market.
Okay, before we move on to the next question, I have a follow-up question for Q. Q, you mentioned like for you, the board of advisor and everything, I mean the decision-making process, it went smooth. But people sitting out here who's looking for integrating Bitcoin into its treasury, what do you have to suggest, or what's your 2 cents on it?
If you are running a corporation, a company today, and you're thinking about this, I think, first of all, you have to study the history of money. So all of us, I'm assuming the fact that you're at this conference, have a pretty positive view on Bitcoin or crypto in general. And I would encourage anyone that's running a corporation to first study history of money. Understand how we got to where we got to today in terms of the fiat system. I mean, fiat system has been around for a long time. We're talking about 10th century Song dynasty, right? But then we had evolutions of how we decided as a society on monetary systems. It was at some point backed by silver and then gold. Obviously, that didn't really work out because governments needed to spend money on their favorite projects, and this was when during World War I, if you remember, where we started getting into situations where if your currency is gold-backed, then you couldn't increase your war expenditures. And obviously, Great Depression came through. A lot of governments tried really hard to stick with the gold standard after devaluing their currency. And then they kind of gave up in 1971, right? So where are we today, 50 years later? So we're in a situation in which people start wondering, should we really trust the government to be doing all this and making sure they're responsible? So Bitcoin has a space from that perspective. So when you think about your own company and think about how do I make sure that my shareholders are retaining and increasing value, and that's how we can start thinking about whether Bitcoin should have a place in your treasury. And granted that not every treasury company will do the same thing in the same way, because you have a huge mix. You have people that are basically still very much focused on their core business 90% of the time, and then they decided to add Bitcoin into their treasury. Obviously, there are other companies in which all their attention is on Bitcoin, and that's the only thing they do, right? So there's no one-size-fits-all for this, but I would say, just understand why Bitcoin even has a place in your treasury.
Yeah, thank you. Okay. Let's move 5 years ahead. Alessio, the question is for you. So looking forward in, say, 2030, how do you envision the role of Hex Trust in a world where Bitcoin is now potentially a standard reserve asset for institutions?
I think the next 5 years are going to be transformational, right? So the whole trajectory of crypto adoption, let's not just talk about Bitcoin, maybe just the crypto and blockchain in general. The whole trajectory of blockchain adoption has really just started, right? So until a few years ago, these conferences were basically only for a few people that really believed in this kind of story, etc. Now we're really, the doors have been opened, everybody's coming in, all the financial institutions. But if you think about it, as of today, actually the state of adoption is not as developed yet. If you think about it, especially on the distribution side, banks, private banks, advisors, or pension funds, they haven't really adopted Bitcoin or other cryptos as a potential investable asset. And if you go to the bank, I think nobody has been offered yet to buy some kind of investment products denominated in Bitcoin. So the trajectory is going to be really a hockey stick from now on. But I think there's a couple of other developments that are extremely important. One is really blockchain as an infrastructure, right? In today's world, we all know it. Still, if you need to transfer money from one side of the world to the other side of the world, first of all, it takes a long time. But secondly, you don't know how long it will take, right? If I transfer money to my family in Italy, still, I don't know if it will take 1 day, 2 days, 3 days. It doesn't work over the weekend. And on top of that, I don't even know how much fees I'm going to pay for this settlement. So this whole kind of blockchain infrastructure for payments, cross-border settlements and everything, and stablecoins is actually really, it's not just a buzzword, it's going to be revolutionary because it's going to replace the whole kind of SWIFT and banking rails that we currently have today. And then, I mean, CZ, for those who were here while CZ was speaking, CZ mentioned AI, or he was asked to talk about AI. So AI is going to be, obviously, it's going to be revolutionary, but it's going to be revolutionary also for crypto. Using Michael Saylor's words, he spoke about AI as digital intelligence, and Bitcoin, obviously, he speaks about Bitcoin as digital capital. AI is going to create a lot of wealth. You will have companies with 10, 20 people valued at trillions of dollars just because they can outsource all the labor to basically AI. And AI is not going to use banknotes, it's not going to use PayMe, it's not going to use WeChat Pay to transfer value across different AI agents. It's going to use crypto, it's going to use Bitcoin, and it's going to use all these stablecoin rails. And think about what CZ said, the amount of transactions that AI will do and the amount of wealth that AI will generate is going to be huge. So if crypto is going to be the rails, if crypto is going to be the currency for AI to transact, then the trajectory is even going to be more exponential than we can ever imagine. So the future is bright.
Okay. So for Q, I'll stick to Bitcoin only. So the question would be like, while you are building your, continue building your treasury, how do you vision companies or corporations globally? How would they use Bitcoin? What's your thought on that?
So it's interesting if you see all the attention that's being placed on digital asset treasury companies, DATs. It feels like it's been overdone. But let's step back here, right? Probably 175 publicly listed companies have sort of announced plans to do this. 175 sounds like a lot, but it's not that much if you look at the number of listed companies out there. We're talking about 0.3%, right? I'm not saying that every single publicly listed company should adopt Bitcoin or should be all about Bitcoin treasury, but it just gives you a sense of how early we are. Now, what's more interesting is that when we actually start moving on to the later stage of this development, then you are going to have a much clearer view of what each of these companies have in mind. What are they actually going to do with the Bitcoin, Bitcoin holdings that they have? Because I think every company will have a slightly different direction. So to give you an example, for us, we already have an underlying business, right? We don't talk about it too much in terms of how we're going to integrate both together, because at this point in time, our focus is still trying to accumulate as much as we can. But there's a lot you can do when you get to a point in which Bitcoin payment rails are all set up, in which you can actually integrate Bitcoin into your underlying core business. So that's where the real fun comes. But in the meantime, it's literally, from my perspective, is we're trying to accumulate as much as we can, as quickly as we can. And to give you some perspective, right, just that there isn't enough to go around. I'll just put it this way, 21 million Bitcoins out there. There's a study that says there are 80 million millionaires in the world, right? If every financial advisor tells their client to buy 1 Bitcoin, there's not enough to go around. So what about the rest of us? What about the retailers? What about the corporates? What about the governments? Pension funds haven't really even started coming into the space yet. So the message is we're very early from that perspective. So going back to your question, like how would it look 5 years from now? I would think that we'll go from that 0.3% of companies having Bitcoin to a higher number. Now, I don't know what that number is, but there's a long way to go before we get there.
Okay, so a rapid fire question. What do you think would be the biggest catalyst for institutional Bitcoin adoption in the next, say, 5 years?
So I used to sit in a institutional firm that was investing $500 billion in assets. I'll tell you that when it comes to adoption, it's always about what people's comfort level around regulations, around compliance, around whether there's proper governance. So all that stuff that Alessio said matters, even though it can sound boring to some retail investors. But if the systems are set up properly, if there are high-grade institutional, say, custody service or trading firms, counterparties that are licensed, all that's going to help accelerate adoption. So to me, if there's better regulations, clearer licensing regimes, it's going to help us.
Alessio, do you agree, differ, or do you want to add something?
No, I agree 100%. I mean, maybe the only thing really in terms of trigger, we spoke about AI, we spoke about the institutions and everything, but I think to really, if we're talking about Bitcoin, the thing that really would make a difference is when we will see the first major real central bank or sovereign wealth fund really announcing the purchase and the setup of a specific fund to hold Bitcoins, or the first huge pension funds or pension systems really put in Bitcoins as one of the assets for people that are actually investing in their pension to actually not lose value against the depreciation of fiat. When we see these things happen together with AI, I mean, the trajectory is going to be very surprising for everybody.
Okay. So before we wrap up, any closing remark from you, Q?
Like I said, we're early. We're very early.
Yes.
And the process takes time. Institutional adoption takes time. So by the time pension funds, sovereign wealth funds starts instituting this, you will probably get a sense of the fact that Bitcoin will be at a much higher price from where it is today. But in the meantime, you can see that a lot of people are trying to solve for it, right? The fact that we have ETFs is a way for people to do it. Like to you, maybe it doesn't make sense. Why would people buy ETFs and not Bitcoin? Well, because a lot of these investment managers out there don't have the mandate to buy Bitcoin. They don't even have wallets that are set up, right? Similarly for DATs, like why would they be good exposure for other people? Because there are investment managers out there that can only buy equities. So that actually works really well. So again, we are very early in this process.
Alessio? Okay, that's all. So that's a wrap. It has been a very fascinating discussion, and as Q mentioned, it's a game of demand and supply. So yeah, so go ahead for it. And the corporations who are looking for adopting Bitcoin and who's looking for treasury can reach out to DDC, can reach out to Q, and people can reach out to Hextrust. Alessio, they'll be here. Okay guys, that's a wrap. Thank you for joining us.